Welcome back to Fast Market. It's time for our cash tag segment, so let's bring in Landon Swan, co-founder at LikeFolio. Hey, Landon, welcome back to the show.
Here.
All right, so we're talking more retail, TJX. Stock is just off all-time highs that it hit last week, Landon, so the chart looks pretty good on this one. And, when I look at this, I think of maybe some of the moves that we've seen in Wayfair, did really well on their earnings. Some other names, RH. So it seems like consumers may be turning back to furnishing these homes, new homes that they're buying, or updating maybe furniture and maybe some home goods in their own houses that they're probably staying in due to those higher rates. What kind of data do you guys have at a LikeFolio at this point?
Yeah, I think you're right. When you look at just kind of the space overall, I think the market's really excited about this week because we've got a lot of retail numbers coming out this week. Today, after the bell, and then tomorrow morning we've got Target and Walmart, which is certainly going to overshadow TJX. But TJX will give us a little bit more insight into the market overall, and I think they're benefiting from Bed Bath & Beyond's failure. And you look at the specific, the brand their home goods brand, and they're actually doing really well. You can almost pinpoint when Bed Bath & Beyond kind of closed their stores. So that chart is nice and up and to the right. But when we look at overall how TJX is doing, they're almost leading the way. When you look at mention increase, they are leading the way. When they look at happiness, they're right there with some of the competitors. I'll throw Burlington Coat in there. I think they're beating them by just a little bit. But Ross Stores and Kohl's, they're crushing them as far as happiness goes. But on total mentions, like where we see the movement, people talking about these companies more than last year, TJX is at the top of this group. And I think, it's tough to draw exact competitors with them, but I think Bed Bath & Beyond would have been in this group. And, maybe Target and Walmart you could add in here too. But of this group, TJX is doing really well. And I think they've proven that they can handle this business. This discount model really allows them to manage their costs. They've shown a great job of shown the ability to do a great job here. Managing their inventories down 8% last quarter on the report. And so they've been able to shift goods around and get them to the stores where they're selling and buy the right things and really manage those costs, which of course we have no insight into. But when you look at the report, it clearly shows that management knows what they're doing. And then when you look at just, total purchase intent or just total mentions of people talking about going to these stores, it's a strong chart. It's not like, it's the strongest we've seen, but it is strong. It's up and to the right. It's exactly what you'd want to see. It matches with the stock hitting all-time highs and then kind of consolidating, which is what we're seeing now. It's on the sort of the lower range of a $2 range from 86 to 88 right now, but it's consolidating. And frankly, I'd rather it be on the lower range of consolidation if I'm leaning bullish, which is what we are. So yeah, I like TJX here. I think that there's a pretty low chance that they disappoint on this earnings report. And frankly, some of the premium that I'm seeing in the market seems a little high. So I'll probably be a premium seller, like I'll be maybe selling some puts or something like that. I just don't see them disappointing. I don't know if they're going to break out, but I would think that they're going to, be either within that 86 to 88 range or maybe just a little bit higher.
Landon, their business model of being an off-price retailer, it works in good economies. It works in bad economies. They were a post-COVID winner. They were a Great Recession winner. Correct me if I'm wrong. The only thing that can hurt this company is when you absolutely have to close the stores and people aren't allowed to walk in their brick and mortar locations. Besides that, their business model works in good and bad economies. They're expanding. They keep growing. Now they're growing internationally. This is a company with a business model that just works. They do off-price. You get quality apparel at off-price, off prices. What am I missing here, Landon? As long as the doors are open, they seem to be doing extremely well.
Yeah, I think you're right. No one in management could have seen that coming, and they handle everything else really well. They have executed very well, and you always want to bet on a company that can execute really well. You want to bet on a company in a good industry, that has a good model and all of that. But management and execution is very important, and they have shown the ability to navigate tough waters and excel. And this retail report that just came out showing a pretty healthy consumer who's still motivated by deals. And so the deal seeker is TJ Maxx, right? That's where they're going. So as long as that exists, I think the only environment where they might struggle is in just complete abundance, where everyone is doing well and nobody's worried about any prices whatsoever. And I hope I see that in my lifetime, but I'm not betting on it. So over the next 20, 30 years, there's going to be people for sure that are motivated by deals. That's their model, and they're executing very well. So yeah, I like this company long term. It's not the sexiest name out there, but they're just cranking along, doing their thing and making money. And that's always attractive as an investor.
And Landon, even with the stock up, it's only up about 7% this year, but it didn't have that big dip. So it's, just below all-time highs. What kind of score do you have to going into this one? Do we have to be cautious?
So we're plus 28, which is in the solid bullish territory. Usually 20 is the cutoff. And I kind of go back to what I was talking about earlier. I think that when you look back at some of the moves that it's had over the past several reports, it just doesn't move a ton. But there's a little bit higher move priced in right now. So I think the premium is unjustly high. I would lean into maybe selling puts or doing some kind of vertical on that side, like a bullish vertical where it doesn't go against you, something like that. I'm not betting that this breaks out and we see like 92 tomorrow. I don't think that's realistic, but I think it's likely to either stay in the channel or maybe bump up against that 88 and push a little bit higher. So I don't see it going down to 84, 83. So I think that they're going to report numbers that satisfy investors, don't disappoint, and just show that they're cranking along. That's fully what we expect. That's why we've got a plus 28.
All right, great stuff as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us here on TJX and earnings. Kev, kind of muted move going into earnings, only plus or minus just over $3.20 either way in these shares going into this report.